Let me give you the India perspective, because I think India has challenges of a developed country and an emerging market. And it's interesting to see how India solves the challenges of financial regulations and financial inclusion. First, this is an important slide. The world has changed. 250 years ago, the Industrial Revolution came that saw the rise of Europe. For hundreds and thousands of years, Asia dominated the world GDP. Europe has taken over and built the global supply chain. Now we have the digital revolution. And the world has gone digital with a vengeance. And the numbers are astonishing. Most transactions will be digital. We'll have one single common market across the world. Consumers are going to meet producers on the platform synchronously and asynchronously, and that's going to change the way we do business. And the early movers dominate the market. We've seen how value has gone to the digital companies. Tech is going to eat the leaderboards. The most profitable companies in the world are tech companies. Enormous amount of cash being generated. They're funding innovation like nobody else. And this is dangerous to all of us as consumers because we are creating global monopolies. We don't know how this is going to impact us. In 1948, I think, we had the Global Declaration of Human Rights, the Universal Declaration of Human Rights. Now we need a Universal Declaration of Digital Rights. How do we protect consumers, the 7.8 billion people, from these global digital monopolies who have all your data and who know what you do, what you eat, what you think, and what you're going to do tomorrow? Coordinated capture of the digital day. Mobile operating system, there are two companies, iOS and Google. Internet search, we see what is happening, social media, cloud. Largely American companies. Largely American. China has created its own wall. The rest of us have to bow before the new god, who is the digital god. And the future arenas of competition are transversal technologies, applied AI, edge computing, nanomaterial, tissue engineering. It's now enormous amount of innovation. And if you want to know what innovation is, talk to your 15-year-old. Sadly, most of us are 2 generations apart from the innovation that's happening. Maybe if you don't understand, if you talk to a young, growing up kid, they're going to tell you how they interact with the world and how they see the world, and that's the world of tomorrow, and it's already come. So India is about to take its place as the top 3 economy, and let me give you about how the world is changing. This decade, we could see a shift of global economic power from the developed markets, from the OECD to the emerging markets. We have seen what happened in Europe because of the war. We've seen the growth of China. The figures may change. It's okay, but we're going to see a shift. But for the next 30 years, global savings are going to be with the West. So we're going to see a very unique situation in geopolitics, how economic conditions are going to change. Asia is going to rise, and Asia's economic power is going to be enormous. And India is growing fast. Population is not growing so much. Fertility is below replacement, and we are a $3.15 trillion economy, $10 trillion in PPP. A strong financial base, 2,000 listed companies in NSE. We have $3.5 trillion of market value. We're getting $100 billion of FDI this year, got $80 billion last 2 years, and the Indian mutual fund industry is coming up. But the financial market is getting much more sophisticated with the rise of technology and lower costs. Digitization has transformed India. 1.4 billion people, 1.32 billion unique mobile connections, 850 million internet users, 500 million social media. Then we have a very unique startup system, 3rd largest in the world, 75,000 startups who created $450 billion of value. A lot of innovation happening because of important reasons. 108 unicorns. There are 1,200 unicorns in the world, 850, I think, in the US. China has got 280, and India has got about 108. And if you see all these unicorns, we have maybe 200 plus 250 unicorns by 2025. We have a software industry which exports $178 billion last year. This year will be $200 billion, the largest in the world. 60% of global outsourcing comes to India. We believe we'll have 100,000 startups by 2025. The Indian FinTech is a unique ecosystem that has disrupted the status quo in India. And how did it happen is what I'm going to speak about. Banking in India, 122,000 branches, 209,000 ATMs, 471 million accounts open in the last 5 years. 650 million people in India didn't have an identity. They existed but didn't have an identity because they didn't have a bank account, they didn't have a passport, they didn't have anything, but they didn't exist. So government came with a scheme to open bank account. They opened 470 million bank accounts in 3 years and transferred $300 billion by DBT, direct benefit transfer to the accounts. During COVID, money was transferred to the bank accounts instantaneously. And every 4 months, they transferred money to 90 million farmers in just half an hour. It is happening in India. It's a poor country, $2,200 per capita income. But this is what technology has done, and you can see how things are going. But we have a small banking sector. I know lending is just about $1.5 trillion, $2.1 trillion of total bank deposits. Digital payments. This is what happened with innovation. Digital payment volume grew from 3.47 billion to 9 billion in 2022. In just 2 years, triple. This is huge at almost no cost. Of course, like Sopendru said, some of the venture capitalists are wondering where the returns are going to come. We'll talk about that later. That's why we need a policy dialogue with capital and policy. India is a leader in real-time payments, 25 billion transactions. India leads, and India pays through UPI. We have something called an UPI, Unified Payment Interface, by which you can transfer money from one mobile to another mobile and to a bank account in 30 seconds. It actually works. And we did 6.6 billion transactions last month. At no cost. You can't charge a fee, there's no MDR, so we don't know what revenues are going to come, but it works. And it's brought in financial inclusion. FinTech sector is booming. Like Naveen said, we got a lot of money last year. This year it's been less, but still money is coming in. They still got money, and we got multiple unicorns. FinTech average ticket size has jumped, and this is happening all around the world. We don't know what's going to happen now. This is all past history. Diverse FinTech landscape. Unicorns, total unicorns 22 out of 107, and they got a combined valuation of 68 billion. Then we got Sunicorns and growth stage companies. So across all sorts of FinTech applications, we got many startups which have come. Digital payment startups dominate FinTech. And we have seen how payments have dominated. Now it's going on to lending. Of course, our regulator is very cautious. Like all regulators, they want to protect the consumers. And remember, these are not sophisticated consumers. There are 1.4 billion people. It's a lot of people. And you have to protect them because they are all not very rich. They don't have too much of savings. FinTech India will be a $1 trillion opportunity for those who want to invest. It's fantastic, but we got to see how it works. Banking as a service is disrupting banking chain. Like Naveen said, that's the biggest thing. Banking has dominated the world for 400, 500 years in the way we know it, and that's getting disrupted because banking is becoming services. Today, for the largest bank in India, State Bank of India, which has been around 200 years, about 90+% transactions happen outside the branch, 90+. And they got some 600 million accounts. Zerodha is a broking company, just come out of nowhere. They're the largest broking company in India. They got more than 10 million people operating in broking, and they do trading every single day for a very small fee, fixed fee. They're making enormous amount of money, and they just come out of nowhere. They become the largest player in the markets where individuals trade. Digital broking, not a tier 1 phenomena, is happening all over, in small cities, in the tier 3 cities, 3 or 4 cities, all over the place because of a mobile plan. We get unlimited data on a mobile for $1.50 a month. Indians consume 23 GB of data every single month. 23 GB of data. BNPL versus income and credit, same problem like you have. You know, the Reserve Bank, the regulator is trying to clamp down because they don't want unbilled lending to happen. We have some apps coming from somewhere else which charge usurious interest rates. A lot of people lost money, and in the crypto decline, a lot of people lost money, especially in my city of Bangalore. You know, we saw consumer default go up because, you know, they probably borrowed money to buy crypto. So we have got something like digital public goods. This is a very unique Indian contribution to FinTech innovation. The only question is, how do people make money? That is something we need to discuss. But digital public goods are a unique Indian advantage that has delivered FinTech transformation. Now, this is the real innovation that's happened in the FinTech world, the India Stack. The India Stack is a set of code written by volunteers in Bangalore, which brought us Aadhaar. Aadhaar is a unique number that everybody has. 1.3 billion people have a unique number. So all of us got a number. Through the number, we can transact, and we exist because KYC can be done digitally. And then we have a digital locker where we store all the data free of cost. We have an open data store. We have UPI for payments. And we have authentication to give identity. And all at almost no cost. And this 1.3 billion people got their unique number at a cost of $1.5 billion. Because this was developed by volunteers in Bangalore under Nandan Nilekani, who headed the UIDI, the authority the government set up as an autonomous body. The evolution of India's stack, it's taken 10 years. It's not easy. It's taken 10 years, happened in 2010. Where was FinTech innovation in 2010? Quietly, and a lot of things have happened because the platforms are there. Rapid formalization. 18 billion in GST collections. We have about 1.2 million people who filed GST returns. 17 taxes were unified into one single tax. And it works. 64 billion UPI transaction, 96% reduction in mobile data costs since 2014. The mobile companies didn't make money. Now they're making money, but then we had, great financial inclusion. So world-class products are being built on the India stack, on a set of open APIs. The APIs are open. Anybody can come and use them. The platform is available, and you can build on top of that and hopefully make a little bit of money for investors. Impact of the India stack, turnaround time for retail consumer onboarding for a bank come down from 6 days to 1 hour. Digital transformation for KYC, 4 hours to 2 minutes. And for coming on to a digital platform for trading in the markets is come down from 2 hours to 4 minutes. We'll go from data poor to data rich in 5 years. And we're already there. India will have the largest publicly available data bank in the world. China is bigger, but China has got their own firewall, so we don't know. But this will be a public repository of data. And we're having neobanks come on top of the banks, which are really taking away customers. You ask who owns the customer? The neobanks are a set of APIs on top of a bank account where you can manage multiple bank accounts. For example, Open has got 3 million MSMEs on the platform in 2.5 years. They get 70,000 MSMEs a year. Jupiter gets 165,000 bank accounts being opened every single month. And they operate all the bank accounts that you have, multiple banks. So there's a set of APIs on top of bank accounts. Credit without friction. That's what we want. We are an underbanked country. We need more credit, and poor people need credit. They're getting enormous amount of credit right now through technology. And this is important. Look at the speed of change. 19 days for Pokemon to go to 50 million users. We have a health app in India which had 50 million in 13 days. Now they got about 300 million users. All of us have got a COVID electronic certificate. 1.3 billion people. It works. It's a public authority which gives you a certificate. Account aggregators framework. Now, this is an interesting innovation that came in India. The regulator said, along with others, that we need somebody who can aggregate all your bank accounts. But the problem is the bank owns the data. The bank is not going to give you anything. So we have an aggregator who sits on top of bank accounts, and the aggregator can collect all your data and give the data to somebody that you want on your permission. So we created a group of people called bank aggregators. OECN is an open credit enabled network which is going to revolutionize digital lending. How do you lend to people who don't have a lending track record? So we're going to have a network whereby we're going to give data to people and ask the banks to bid. So banks bid and give money to many small companies, MSMEs, and individuals through this, which is a public good. ONDC, this is another thing, because how do you take care of the e-commerce companies who are going to become big monopolies? What do you do with small mom-and-pop stores? I mean, they're human beings, right? You can't destroy them. They got jobs. How will they feed themselves? They're small traders, earn a little bit of money for survival. In emerging markets, they have to survive. In developed markets, it's okay, you got jobs, we don't have jobs. So we got something called an open network for digital commerce, where all of them come together and use the platform and Amazon and Flipkart and others to do transactions. So they become a channel between consumers and others who give them goods. Open protocols are reimagining the entire industry and ecosystem. Is this the future? I mean, we got to see. Are open protocols the future? Are closed protocols the future? We have to embrace this. This is what regulators should debate. How do you create an open protocol around the world so financial transactions give place? Because the important question for all of us is, who is important, the consumer or the producer? How do you balance consumer interest with producer interest? How do you make sure there's enough money in the system? You have to protect consumers. They're human beings, right? Then what do you do with the providers? We need them too because they have to invest. We can't invest. Orienting policy to channel FinTech innovation, productivity should be a priority. How do we do it, Navin, is what we got to debate today. Now, what has worked in Indian FinTech? Active support by government and regulators. Fantastic support by the Reserve Bank of India and the government. Prime Minister Modi came to power in 2014 and said, I want every Indian to have a bank account. So we have Aadhaar to give a number, and then we had a drive. He called everybody and said, I want these 600 million people to have bank accounts. Everybody said, we can't do it. He said, do it. It happened, 470 million. And women got bank accounts. Women didn't have bank accounts. And during COVID, he transferred money to women, poor women across India. They needed money for survival. And he transferred money, $300 billion. $300 billion may look like a small amount of money, but for India, it's very big. And they did it consistently, and we were able to do it at low cost. We saved $25 billion, which are being stolen, because ineligible people were getting money. We could get all the data, put it together, identify, link it with the income tax database, link it with the land records, and find out who doesn't deserve and ease them out. We give free food to 800 million people. Free food every month. About 80 million tons of food grains are given free. Now, how do you make sure it goes to deserving people? And it's all because of this. Digital public goods are a tech platform for faster competition. It worked. And we created this platform. They're owned by public entities, and they're funded by the budget. We got to find out how to do things. Jan Dhan Aadhaar, this is about the mobile to open bank accounts, open protocols created by tech enthusiasts. Now, we have a very unique system where there are digital enthusiasts in my city of Bangalore. They come together, they're working with government to create these protocols. It's not done by government. It's not done by private industry. It's done by digital innovators who are volunteers. It's very unique. And then high-quality tech entrepreneurship and capital inflow. We got $112 billion of capital coming from 2014 till 2022, and now March 22, out of it, $60 billion went to FinTech. Now, after getting money into FinTech, like Supendra said, people discovered there's no revenue model. Now, we got a problem. We got to solve the problem. So what is work in progress? Revenue model is missing in UPI. MDR is zero. Now, government is saying we're going to have MDR. They will have MDR, and I think it's going to come. Because B2B, you can charge. B2C, you cannot charge. Regulation needs stability. Regulators are concerned about consumers. They're also fearful of what will happen. Damned if you do, damned if you don't. So what do? And they have to take the buck stops there, right? So 2 steps forward, 1 step back. They have to learn on the job. And they're not the digital era people. They're the analog people who have seen a different world, who have been through downturns, who have seen global financial crisis. They're scared. Now they have to work with all these tech entrepreneurs, say, yeah, keep going. So they don't know what to do. So we got this inadequate local equity participation. Only 10% of the $112 billion capital that came to India has come from local markets. Our capitalistic class is still a rent-seeking class. They're not funding enough innovation. Foreign money is coming in. They see innovation happening, but we have a challenge. Challenges to global FinTech. Bank needs multiple vendors. What do you do with banks who've got multiple databases, multiple legacy? Many banks have programs run on COBOL. I think 40-45% of all banks' programming is run on COBOL. And India has got a large population who knows COBOL. I don't think the rest of the world knows COBOL. I learned COBOL in 1979, long time ago. But nobody knows COBOL. Fortran, something called Fortran, Unix, all the nice stuff, right? People have forgotten that. Now, what do you do with banks who got all that unique legacy? So banks need multiple vendors to transition the tech stack. And now you have this new age companies who are coming, giving them a ride out, and what do you do? So there's a problem for global FinTech. Banking suffer from talent shortage and shortfall. Huge amount of investment required, huge amount of talent required, and this is going to be a challenge. Because all that talent is going to the innovators. They want to make money. You can't get high-quality tech talent anymore. And many people who build the tech are retiring. I used to meet a vice chairman of a big bank from America come to us at Infosys, and he told me the people who wrote the code are all gone. They don't even have the source code for much of the tech. And they said, I'm going to do something at the top. I'm there for 3 years. Then I'm gone. It's not my problem anymore. Global FinTech. Global monopolies and duopolies. Look at this. Google Pay is dominating. What do you do with all these platforms who want to come into FinTech? That's a major challenge. Whom do you protect? They help the consumers. Ease of transactions happen. Life has become easier. Credit is available. But what about the cost? What about the consumer? Who is going to protect the consumer? What about the data? Now, regulations here, regulation is often late. How do you get regulation in time? I don't know. I mean, maybe you got an answer here in Singapore. How do you make sure regulators lead or participate? Maybe the sandbox is a place where you can do that. Continuous dialogue is required. An open mind is required. And innovators to reach out to regulators. Innovators don't want to reach out to regulators because they find some kind of a gap, and they want to utilize the gap and become too big. And they want to grow fast. They don't want to tell the regulators what they want because the regulators may bring in regulations. So innovators have this fear. And regulators become suspicious because they try to think, why are these people coming to us to get something that they want? Are we opening up too soon? We don't know. So I think it's important to have a dialogue. We've seen all this. Right? Central Bank of India says no cryptocurrency because they all thought they're going to be a new currency that's going to come. I mean, there is a lot of talk, but you know what happened there. Ensuring data localization. This is the big challenge of this decade. How do you protect individual data? Who owns the data? I own the data. It is my data. Now, if you want to use the data on your platform, you've got to ask my permission. How do you make it happen? Because the data resides in Google, and Google makes you sign something that you sign. You give away all your rights. The world works on contracts, and it's an unconscionable contract between a consumer who has no rights, no knowledge, and a big, big global company. What do you do? And it's very helpful to you. We want Google. We can't live a life without Google, right? So, look at this, challenge to global tech, ensuring data localization and privacy. What do you do with hackers? What do you do with cybersecurity? What do you do with the enormous amount of data that can be hacked? What do you do with all the deep tech where the deep layers where all this data resides and is sold, right? And the hackers are smarter than everybody else. So FinTech innovation, aligned policy, and informed capital can transform the global financial architecture. That's what we hope. And lead to inclusive prosperity. Now, should prosperity be inclusive? That's what regulators want, that's what government wants, that's what people want. And we all want a better world, a prosperous world, where everybody gets access to credit. But how do you give access to credit at a low cost and ensure protection of the consumers? We don't know, and that's what you've got to debate. And that's the India case. Thank you very much. You have questions? Thank you.
We do have time for a couple of questions that we can take from the audiences. If there is anyone who has a comment, agree, disagree, question, clarification. Okay.
Morning, great speech and great starting remarks as well. Wonderful journey for India. I was wondering, I'm Shaurav from Proxterra. I was wondering, how does this fit into the international ecosystem?
Well, one is that digital public goods is something that we had to promote around the world. The emerging markets need it. The developed markets, I don't know. They're very rich, they got enough money. But the emerging markets need it. So I think about 18 countries are working with India on UPI. Many countries are looking at Aadhaar as a database to give a unique number and identity to people. And I think that's what we need to debate. Because today, with settlements in dollars becoming contentious because of many things, because of the power of the US to turn off the global system. The US is the global hegemon. Tomorrow they can say, we don't like you, so you're out of SWIFT. What do you do? What do we do? We need oil, we need dollars, we need money. Our currencies are in, reserves are in dollars, and the US says, I'm going to block it. Why? I don't like your face. What do you do? So we've got to debate this. So we need a global financial architecture which is independent for global transfers to protect all nations and all people of this world so that politics does not impact that in a way which can be dangerous. Do we have a solution? We don't have a solution. Maybe we are going to work together, but digital public goods are an alternative. But is it socialism? Is it against capitalism? Is it against free market? I don't want to answer that question. I'm a venture capitalist, I want to make a lot of money, okay? So, I want consumers to come up. I want an inclusive world. I want a better world. That's what we work for, right? All of us want a better world with everybody being treated well, but I want to make a lot of money.